What up, people? Happy Saturday. Kamar, y'all here, Finance Rebel Show. Y'all know what we do every Saturday. Every Saturday, we talk about a wealthy conversation, or we have our wealthy conversation segment of the Finance Rebel Show. So today, I'm running a little bit behind, but today we're going to talk about some good stuff, right? Stock market, in particular, Black stock market investors, and how are they doing? How are they faring against white stock market investors? All right, but before we do that, let me just go ahead and cue this up so I can share it. I'm not live yet on Instagram. Let me do that right now. Again, running a little bit behind, but as we are getting all tooled up, everybody's coming in the room. And for this, do me a favor, share this out with someone. Share it out with a loved one, with someone who is really focused on and interested in increasing their overall level of financial IQ, financial education. Because, I try to make this fun. I try to make it simple. I try to make it plain. As some would say, I try to put it where the goats can get it, and basically everybody can understand it. That's one of them old school sayings. But again, welcome everybody today. This is our wealthy conversation, and we're going to be talking about, again, stock market participation with Black folks. And before we get to that, we got to talk a little bit about the IRS and a couple of questions that I've been getting a lot during this tax season. So let's get busy, y'all. Let's get busy. Stock market closed at 39.13 today. Stock market is up 4.18%. All right. Markets have been getting a little testy lately, but it's to be expected, especially when we're in this all-time high territory. Oil closed at $61.44, so it's down a little bit for the week, but it's still up. And man, our gas prices starting to attack the wallet. Well, I shouldn't say starting. Gas prices have definitely attacked the wallet. All right. Gold prices, $17.43. Again, $17.43. So we're still down year to date. But gold's kind of staying in there a little bit, but it's still down about 8, almost 9% year to date. 8, almost 9% year to date. So it's getting up there. It's testing the waters, so to speak. All right, folks. So again, I wanted to talk today about stock market investing amongst Black investors today. But again, before we do that, let's talk about the IRS. So the IRS announced this week that they will indeed be extending tax season. Now, the other day when I was on during our Wealthy Wednesday segment, I said that it's likely to happen. Well, it has happened. It's official. So tax season will now end on May 17th, roughly 32 days later than our normal tax season. Now, this is kind of like a redo of last year. It is a redo of last year. So it's going to be very interesting. Now, what I want to say and what I always say is don't delay. Don't take this extension as a cause to procrastinate. Now is not the time to procrastinate. Now is the time to get it in gear and get your stuff together with a little bit of less stress, right? But let's not be lackadaisical and lethargic, as many of us oftentimes are when it comes to our taxes. A lot of people like to wait. Doesn't pay to wait. Now, here's a question I've been getting, it seems like a lot this week. A lot of people ask me, well, Kamari, tax season got extended. I think I'm going to owe taxes, so I'm just going to go ahead and wait. Now, the reason why I caution against waiting is because many of us wait, and we wait, and we wait, and then it winds up getting super duper late, and super duper late equals fines, penalties, and fees most times. So I try to caution. I'm trying to be the canary in the mines to say, don't do that. I watched many a person do that over the years. And what happens is once you get the habit of waiting, you blow deadlines. When you blow deadlines, you incur fees. So I say just get it done early. And once you get it done early, you can start to kind of plan and strategize on how you can handle your IRS debt, your IRS bill. Just because you owe the IRS money, it's not the end of the world. Listen, I owe the IRS money. I told my wife the other day, we'll probably wind up owing the IRS money every year, whether that be through me paying estimated payments or not. It's still more than what the average person will do. Like, what I mean by that is I'm probably not going to be getting any refunds anytime soon. So kiss those refunds goodbye. And I'm okay with that. I'm totally okay with that. And so if you're making money, that means you're going to have to pay tax. 9 times out of 10. 9 times out of 10. And you just don't want to get caught up in the mix because, again, you can wait. The interest and penalty will pile on. The late filing fees will pile on. None of them feel good. None of them are sexy. All right. So, again, get it done. Get it done. Then, like I said, you can strategize how to pay the debt off, whether it be an installment plan. Don't go for some of these janky, what they call fresh start initiatives. I'm pretty sure all of y'all have heard the commercials. If you owe the IRS $10,000 or more, you may be eligible for the Fresh Start Initiative. There really isn't any real Fresh Start Initiative where they're talking about offering compromise, and you have to qualify for that. You don't just get it. But that's what sexy marketers and advertisers do. They put the stake out there, they put the bait out there, and once you grab the hook, you're kind of trapped. Then you get lured into their overall sales and promotional system. So don't go for that, y'all. Don't go for that. It's a better way to do things. I see some of us are here now. Some of us are on. Tiffany's here. Hey, Tiffany, how you doing? Karan, what's up, man? How you doing? Jose, what's up? Now, I sent Karan. Karan said he wanted me to do more interviews. So I personally sent Karan the latest interview to drop on the podcast, which was with Raina, Bariqua Raina. So I would love for all of y'all to check that out when you get an opportunity. It was a great conversation she and I had. And I think a lot of y'all will enjoy it if you didn't get a chance to see the live. So go on over to anywhere you can find the Finance Rebel Show. Just Google the Finance Rebel Show. You'll find it on Apple, on Google, on Spotify, anywhere. Again, anywhere podcasts are played. All right. Episode 121. Oh, okay, Tiffany, you got a hoodie from her website. Great. I love that. I love to see Black folks supporting Black folks. If y'all see my shirt today, this is what it says. Support some Black shit. All right, so y'all know I'm always on that vibe. What's up, Mark? How you doing? Wichita Company on a ride with you. All right, my man. I hope all is well out there in the Midwest. I heard you was hanging out with my buddy a little bit, or at least talking a little bit out there in Wichita. Lovely Wichita. All right, folks. So listen, about a month ago, and I've been wanting to watch this for a while, but about a month ago, Ariel Investments and Charles Schwab put out their annual study. Yes, Tiffany, you can get one of mine. I'll make sure I put the link in there. And I plan on doing some new designs, some redesigns on the logo. But back to what I was saying. Every year, Charles Schwab and Ariel Investments, if you don't know who Ariel Investments is, that is a Black mutual fund company started by John Rogers, right? And now it's co-CEO'd or co-led by John Rogers and Melody Hobson. Many of you, I'm pretty sure, are familiar with Melody Hobson. She's always on TV, always doing something. But John Rogers is one of my personal heroes in professional investment management. Definitely somebody I looked up to, one of the mentors in my head. Maybe one day I'll get a chance to meet him. Just putting it out in the universe now. Would love to meet Ms. Hobson as well. But again, every year they put out this study. And the study is called the Black Investor Study. And what they are studying, or what they are covering, is how well Black investors are faring against white investors. Or should I say, how well are Black investors participating in the stock market versus white investors? And let me see if I can share this screen, because I want to share it just a little bit. just a little bit. Let's see. Now I'm not going to show their whole thing, but I would like to show you just, what they do. And there's a couple of points on here that I thought were really, really telling. And then, as we go through this, I'm going to give you all some of my thoughts and what I think many of us Black investors should be doing in terms of putting first things first. Because as we know this, well, I hope you know this if you've been watching me for a while, the wealth gap is real, right? The wealth gap is real. So for your average white family, they have approximately $114,000 in net worth. Your average Black family has about $11,000 in net worth. What is net worth? Net worth is when you take all your assets, right? All your belongings, all your property, all your stocks, all your cash in the bank, and you subtract away all your liabilities. What are liabilities? Any loans you might have, mortgages, credit cards, things like that. So you subtract the assets from the liabilities and you are left with net worth. Some of us have positive net worth. Some of us have negative net worth. I want to be totally honest with y'all right now. I have major student loan debt. So guess who is still on the negative side of the net worth column because of my student loan debt? But I'm working to pay that off. And at the same time, I'm building up my portfolio and doing business as well. So I brought that up because somebody asked me for that. And I thought it was really an odd question. Not going off on too much of a tangent, but it was the podcast award people. So they said they were going to put me on a directory and all that, which I thought was really cool. But then when they went through the survey, they asked like, well, what is your net worth? As if my net worth is tied to the value of information that I give to the audience every week. I don't think it is, but y'all tell me if it is or if it's not. But I said, well, I've listed it down, but again, I thought it was like really weird. Like money is truly a measure of effectiveness. It is sometimes, and I know it's the marking stick or the measuring stick for everything. But I think in this case where I was a single Black father, I put myself through college on my own. I didn't have any help. And I had to take out student loans to get it done. So I'm not ashamed of that in any way, stretch or form of the imagination, but I just found it really weird. All right, so I won't go too much into a tangent on that, folks. So again, Ariel and Charles Schwab puts this survey out every year. They've been putting this survey out since 1998. And it's really, really interesting when you look at it, because there's a lot of facts. Now, as many of you can probably gather, Black folks still are trailing the white population in the United States in terms of investing. Now, one thing I've been really dying to understand is who exactly they are surveying. But for right now, I'm going to take it at face value. So the research objectives, it has identified similarities and differences between middle-class Blacks and white Americans with regards to savings and investing. Examine the factors, particularly past influences and underlying beliefs that may impact how Black and white Americans think about financial matters. Identify and understand the influences of the pandemic on investing trends. Assess the expectations and sentiment that Black and white Americans face in their financial future, and determine any shifts in attitudes or behaviors that have occurred over time. So again, I'm not going to do a PowerPoint slide for y'all because I don't want to put y'all to sleep. And it's kind of hard for me to do this all by myself. All right. So the methodology, an online survey of approximately 18 minutes in length was conducted during the period of time between December 1st and December 14th, 2020, with a sample provided by an opt-in consumer panel. All right, so it's a mix of genders, 18 plus. Now, the income group that they surveyed was 50,000 K plus income in 2019. So they had to have an income of 50,000 or more. They kind of call it a middle America approach to looking at this, because your average income in America is approximately $50,000-ish, right? So a total of 2,100 people were surveyed. All right, 1,007 of them identified as black, 1,097 were identified as white. All right. Ariel Investments and Charles Schwab were not identified as the sponsors of the research. So, all right, so that's important to know. Anytime you are looking at research, you want to know the sample size and the group. And there's also some other factors that you want to think about as well. I know a lot of times people throw around these stats, but if you don't understand what's behind the stats really are meaningless because, in my opinion, a lot of these stats are actually skewed. And what do I mean by that? The cake is kind of baked, right? And again, I don't want to get too far into that and nerd out. But even of the sample participants, you could have some people with really varying views. For example, let's say all 1,007 black folks literally lived in the projects, in the housing projects, versus 1,007 of those folks might live in middle-class neighborhoods, could still make the same amount of money. There are people that live in that have the same income ranges, but live in totally different geographical areas. But that will shift or skew their overall mindset. So you gotta think of that again. You gotta think of that again. All right, Ray. Real quick, we're looking at the Black Investor Survey, the 2020 Black Investor Survey that is conducted by Ariel Investments and Charles Schwab every year. All right. So I just want y'all to think about that because that is very, very important. All right. And so before I go any further, I just want to acknowledge everybody. Because, when you come in the house, you're supposed to speak to people. Our new Secretary of Housing and Urban Development schooled everybody. If everybody saw that, the former congressperson out of Ohio. I can't think of her name off the top of my head, but she got the press together because she spoke to them. They didn't speak back, and she got them together. So let me do my thing because, as black folks, we supposed to speak. That's just human etiquette right there. All right. So Shay Renee 215, how are you? Lock and Key. Ray Pryor, how are you? Philly Dumas, Perez J2, DL Store, Kim Hires, Dilly Dukes, Jack the first three, how are you, brother? And Gentle Beast 24 Fit. How is everybody today? All right, let's see if anybody else has joined us on the Facebooks and YouTubes. All right, so Nicole Knowles here. She says, everybody hit the like button. I appreciate that. Yes, because I am fighting the algorithms. So help me share this information out with more people. Virgo Life, you know what? That's a good part. What it would be like if we took out the 1%. Now, I'm not sure in what context you're saying take them out. I have some thoughts on that. My thoughts are not in line with your average person, though. So I'll just leave it at that. We can talk about that another time. Hey, Adrian, how you doing? Welcome. If you're just joining, I'm Kamari Ellis. You're watching the Finance Rebel Show. Every Saturday at noon, we do our Wealthy Conversation segment. So whether you're watching on YouTube, Facebook, Instagram, or on the recorded sessions on the podcast, welcome. All right, so let's get back to this because I took notes on this. It was a great conversation. So not only in this conversation was there Melody Hobson, but there was Melody Hobson, the CEO of Charles Schwab. I'll also, you know what? Well, let me complete my thought. Melody Hobson, John Rogers. There's another gentleman on there from Charles Schwab as well, and as well as the CEO from Charles Schwab. I will put this link in the description of the video so you all can watch this when you have time. But I'll give you, my thoughts of it. I thought it was good. But again, like I said, stock market has been a major source of why the black and white wealth gap is so wide. Why is that? Usually, historically, over time, black people love to buy real estate, especially their residential homes, as their main source of investment, of their perceived investment. Now, I'm not going to go too deep into the weeds with this and how I don't really consider your home as an investment. Yes, it's an asset, but I don't really consider it an investment. All right. But while we are predominantly buying the bricks and mortar that we live in, Our white counterparts are also buying the bricks and mortar that they live in. Plus, they are investing in the stock market. Plus, they tend to save more than us. So all of those things tend to compound. Plus, not to just glaze over this, right? We can't ignore the history and the history of enslavement, the history of Jim Crow, the history of redlining, the history of housing discrimination, and the history of job discrimination as well. All of those things are factors in the wealth gap between black and white. So I'm not trying to glaze over that, but this one really focuses on the stock market. All right. So it looks like stock market participation has dropped since they have done the survey, since they first started the survey. I found that interesting, but I get it because you have to factor in um, the pandemic. You got to factor that in. You can't take that away. And so I'm going to put this up on the screen. Let me see if I can make that a little bit bigger for everybody. For those who are listening on the podcast or on IG, I apologize, but there's nothing I can do about that technology right now. So, however, when we look at this chart, so they started this survey January 1998. All right, so the yellow line underneath shows 81% participation, and that is showing that is representing white folks who invest in the stock market. 57% is the blue line, which is above, and again, that represents black amount of investing in the stock market. So starting in 1998, we have a gap, we have disparities, 81% versus 57%. What is that? Roughly a 24% gap. And then over the years, white participation has stayed above, kind of around at 82-ish, 79-ish percent. And it looks like it jumped to 86% in 2015. Black participation kind of stayed around that 57, 60-ish view. But it hit a zenith or hit a high point in June and July of 2015, where they had 67%. Now, when they did this survey in December of 2020, white participation in the stock market was 71%. Black participation was 55%. Now, when you look at that, when you started, the gap was roughly 24%. Now, however, it's roughly, roughly 15%, 16%. So it's come down. So we've seen some improvements, but this last year was a special year, once in a lifetime thing, once in a century type thing with COVID and with everything else that's going on. So some of those numbers are a bit exaggerated, in my opinion. All right, that's why I say it's really, really important to understand the data and what went into the data, right? And when they talk about investing, they're talking about people who are buying stock market and mutual funds, right? Regular stocks, mutual funds, and or ETFs. So it's covering the gambit in terms of that. Now, again, I think it's very, very, very interesting, right? And so here is another slide I just want to show you real quick. That didn't go out right. As it relates to who's investing, right, amongst black folks, who's investing amongst white folks. So when you look at those under 40 amongst blacks, we're on par with whites under 40 and under. So it's about 63%. Now, when we start to get into my age range and higher, this is when things gets a little funky. So, but we want to applaud, right? We want to look at it. I don't want to bury the lead. Young black Americans 40 and younger are on par with white young Americans 40 and under. They're both investing. They're both participating in the stock market at a 63% level based on the survey numbers, right? Okay. So 40 to 59, black Americans participate at a 56% participation rate, and white Americans participate at a 72% rate. That's a pretty big disparity. All right. Ages 60 plus, black Americans, 46%. So 46% of Black Americans participate in the stock market versus white Americans at 72%. Again, another big disparity. So you can see this is a generational thing here also. Many of the youth are cool with investing in the markets. And I think that's great. I mean, I know I talk about kind of some of the rationale, some of the reasons why I started to be interested in the markets. It kind of makes sense. Like I said, I used to see my dad get his dividend checks from American General, which is a defense company, every quarter. And I always wondered about it. Now, I talked about John Rogers, who's the founder of Ariel Investments. I didn't notice till later. But his father started buying stock for him for birthdays and Christmases when he was 12. Now, if y'all go back to some of my previous recordings, previous videos, what do I tell y'all? And I did this before I found out about John Rogers. So y'all, I said some of the best ways to invest or get our children involved in investing is give them stock for birthdays and holidays. And you know what? I'll say this. Maybe the universe had me see that John Rogers clip before. Maybe I forgot. But at either rate, it's great advice. He's the OG. He's the elder. So I'll definitely bow down and say, I got it from him. But again, that got him started. That got his curiosity going. You can take some of those same jewels and gems and use for your children, and not just your biological children. Some of the children that are in your overall village, whether it be your nieces or your cousins. And you know, we Black, so everybody got cousin, everybody play cousin. So even some of those children, and it doesn't have to be a whole lot of money. There's platforms out there that you can take, get gift cards and give them to some of the children in your village for birthday and holiday gifts. All right. So that's one of the things, right? So again, this study is very, very interesting. I'm intrigued with it. I usually follow it every year and I try to stay on top of it. I wanted to show y'all something else because I got a bunch of notes. So here's something. And Melody Hobson said this. So I want to make sure I give everybody their credit. I'm not trying to plagiarize anyone. But Melody Hobson said something during this broadcast. She said the 401k plan has been magical for Black folks. Why has it been magical for Black folks? And just for the record, y'all know I'm a big fan and a big proponent of the 401k fan, even though much of Twitter LLC and Twitter Instagram are all goofy and they tell you that 401k plans are bad. They're not. When used properly, they are the ish. So, all right, when you look at this here, it says defined contribution plans. So they're talking about defined contribution plans being the first time people invest, almost like a gateway to the overall stock market. And what is a defined contribution plan? For this conversation, it's a 401k. If you work at a for-profit company, it's a 457. If you work at like a city or state municipality, and it's a 403B plan if you work at a nonprofit, schools, hospitals, things like that. Black Americans are investing at a 63% clip versus white Americans at a 55% clip, meaning this is the first place that they started to invest through their 401k, through their 403B, through their 457 plan. That's when they started to invest. So this is kind of the gateway for Black folks. That's when they first started to invest. And Melody brought up a good point. Excuse me. A big reason for that is because there's auto enrollment. So before you had to self-select to get into your 403B plan. Now you have to opt out, meaning that you're automatically going to be put into your 401k plan. If you meet all eligibility requirements, you'll be added in. And it's a great way for forced savings. It's a great way to build a nest egg. By the way, your 401k plan, a lot of times you get free money from your employer for it. What I mean by that is a lot of times many employers match what you put into your plan. They use it as an incentive to keep you on the job. So it can be really, really great. It can be really, really beneficial. It can be really, really beneficial. All right. Now, again, there was a couple more pieces I wanted to show you, and then I was going to get into my notes of the things that I thought were really, really good. One more thing. Hold on one second. Like I said, as we're going through this, I want you to keep in mind that this is a survey of people making approximately $50,000 or more. And when I say more, I'm not talking about 500,000. The majority of these people were in and around the $50,000 income range because they wanted to make this normalized for every quote unquote American. All right. I thought this was important. So one of the disparities in investing a lot of times is savings rates, investment rates. For today, savings and investing rates we're going to use this synonymously. Y'all know I am a big proponent though of saving cash, not necessarily just investing in the stock market, as I am also a big proponent of putting money into your investment accounts as well. But today, we're going to look at it synonymously. We're going to talk about it synonymously, okay? So when we look at the rates of savings, so it says Black Americans save on average $231 per month. White Americans, $291. So $291 versus $231. You might say, hey, that's not a lot of money. It's only $60. But somebody add up 60 times 12 for me. Somebody tell me what 60 times 12 for me is. And then that's the gap. And then when you start to add compounding on top of it, let's say it's 5%. So every year we got that $60, 60 times 12. What is that? 60 times 12 was like 72-ish or 720-ish, something like that. 60, yeah, something like that. So 720 plus, let's say 5%. So every year that's $720. That's the gap between Black and white investors, and adds up. And so again, if we're talking about the wealth gap, we have to be serious about our savings or our investing rates as well as much money, the amount of money that we are putting into our plans, whether it be a savings account, investment account, whatever it is. So I thought that was really, really, really interesting. And then I thought this slide right here was really, really interesting. Financial products previously / currently owned. Bank savings accounts, 91% for Black Americans, 92% for white Americans. So on par, we kind of have, we are on par. We have the same level of banking accounts. Now, I would argue there's probably more Black folks that are in the quote unquote unbanked population, or people that can't get bank accounts. If you dig into the data a little bit more, but I don't want to belabor that today. The next option or the next product I thought was really, really interesting. Whole life insurance. So Black folks are buying whole life insurance. We're outpacing Black Americans, at least in this survey, at a greater rate of buying whole life insurance. So 60% of us are buying whole life insurance overall versus 55%. I thought that was really, really interesting. Now, individual stocks, and I hope y'all can see this pretty well. Individual stocks, Black Americans own roughly 52%. The people that participated in this survey, 52% of them own stocks versus the white Americans that participated in this survey, they had 62% of ownership. Individual stocks, your Fords, your Teslas. I know y'all crazy about Tesla. Your GMs, your Coca-Colas, things like that. So again, I thought that was really, really interesting when you look at some of the disparities. All right, so let me check in with folks before we go to the next section. Hey, Lang, how you doing? Welcome. Priscilla, how are you? Glad you're here too. All right. Erica, how are you? Hello, love your channel. This is off topic. I'm warning if you have any content on personal finances. There's personal finance. But yeah, there's a bunch of stuff on my channel, on my YouTube channel. That's where you're commenting from. I talk about taxes, personal finance, investment mostly. So you can find a full array of things up there. All right, Josh, how are you? He says, crazy how many people don't understand matching or utilize it. Free money. Yes, sir. Amen. It is free money. But say it again, your 401k match is free money. So please take advantage of the 401k match. All right, who else is here? All right, so Philly Demon says, the tax guy once told me I make too much money for the neighborhood I lived in. I could go so many different ways for that, right? If you look at a lot of the growth, let's look at Philadelphia. Your name is Philly Demon, so I'm assuming you're from Philly. I know we have a national audience here. But if you look at any of your urban areas, aka any of your black areas, typically that were undervalued for a while, a lot of times those property values are the ones that are being gentrified, i.e. the property values are raising. I'm not going to go into the point of gentrification, not today, because we're talking about black versus white participation in the overall stock market. But I think we got to start challenging some of these myths that we may have. I think you should live where you are most comfortable. If you're single, I think you have a lot more flexibility. If you have a family, you probably want to live somewhere where you have a good school district and you can feel comfortable with your family coming to and fro. I mean, it's a challenging thing. It's a challenging thing. Prim and Dapper, how are you? Vicky Joy, how are you? You said 720. What's 720? Miss Music, how are you? Tiger Eye Investments, how are you? And Kosali Kareem, I hope I said your name right. My apologies if I messed it up. But anyway, back to regularly programming schedule. So I want to give y'all my notes, and then I want to give y'all some of my thoughts on how we can further decrease this gap in the stock market investment, right, and participating in the stock market. All right. So one of the things that I thought was really, really interesting was the stock market drop in the participation. But again, that was due to COVID. Congress made some tax law changes over the last year that took away some of the penalties for early withdrawals. All right. So before, if you took out money out of your, let's say, IRAs or 401ks, it varies oftentimes, but usually if you took it out before the age of 59 and a half, you had to pay a 10% penalty on top of whatever tax you had to pay. Congress waived that because of the pandemic. Congress knew that people had to get money in the pockets of Americans so they could stay afloat, because many of them lost jobs. Many of them had to stay home. Many a child had to stay home because their school closed. So that just wreaked havoc on a lot of folks. All right. So that's one. And I think that was one of the factors and part of why some people may have dropped in terms of stock market participation. All right. But again, I talked about this earlier. The gap is closing. The gap between black participants in the stock market versus white participants in the stock market. It's closing. It's getting smaller. That's important. Now, there was one thing, again, on average, $393 a month versus $693. So keep those numbers in mind. $393 versus $693. So folks that put money into their 401k, they put it in. Your average black family, your average black person saves $393 a month. Your average white person saves $693 per month. That's big. That's big. And so I think, I'm sorry, let me back that up. Your average person savings, that's savings overall. I got that from the study as well. I didn't go over that on the slide, but your average savings was $393 for a black American versus $693 for a white American. That's huge. And again, part of the reason why people are able to leverage the American system, whatever you want to call it, I'm not getting into any of the isms today, but they have more access to capital. They have more access to capital because they're Many of the whites that participated are not being beleaguered and plagued by consumerism as much. Many in our community have been beleaguered and plagued by consumerism/materialism. And again, can't forget many of the factors: racism, workplace discrimination. A lot of that comes into play. A lot of that comes into play. Something else they brought up I thought was really interesting is that many of the Black participants in the survey had potentially taken out loans from family members and have also given loans to family members. What does that mean? It means that we help out a lot more than some of the other white counterparts that we have. So we got to think about that because our community isn't as stable, financially stable as the country. I mean, if you think about unemployment rates, typically unemployment rates have been twice that of the national average. So we don't get jobs at the same rate, right? So a lot of those things again factor in. So those that do have jobs, a lot of times are helping those who are struggling, are helping those who are a little behind. That's what we do. You know, it's family. I get it. I get it. All right. So 401k participation. Okay. So Black Americans, we invest 20% less than white Americans. That's one of the points I got out of it. That's bad. Again, the 401k plan, it's another cheat code, y'all. It's another wealth cheat code. If you work a job. I know everybody is talking about going out on your own, doing your own thing, but it ain't easy. And I'm not trying to discourage anyone. So please don't take this as being discouraging. I'm just giving you the actual factual. Most businesses go broke within the first 5 years. So what does that do? That usually puts you behind the 8 ball as it turns to retirement. Now, if you're like me, I don't ever plan on retiring. I plan on always kind of getting busy doing something. I don't ever see myself just staying home, playing bid whisk, knitting, tinkering around the garage and building stuff. Now, will I stay home sometimes and do some things? Yeah. But I don't look at it as a formal retirement. Like I just stop. Now, the overall concept of retirement is like you stop working, you go sit at home and watch TV, you go to the beach, maybe you play with your grandkids. So here's the thing where we could all meet in the middle. At some point, all of our bodies are going to slow down. I don't care if you are a ditch digger or a banker. At some point, when you get up out of the bed in the morning, you're going to be like, I ain't got time. I don't want to do this no more. And if you get to that point and you have money, let's call it retirement savings. If you have money for retirement savings, it makes life a lot better. How do you get to that point? Because it's coming. I know a lot of times we can't fathom that because we're young and we're strong and we're able to run and jump and play and do all these other amazing things. And we think we're indestructible, especially my 20 to 25 to 35-year-old folks. But there comes a time you can look at history. You can just look at grandma, nana, pop, and grandpa. We slow down. The better we prepare for it now, the better we'll be in retirement. The more money we save overall, not just for retirement, but overall, we'll be a lot better. We'll be a whole lot better. So just think about that, right? 26% less than white Americans. Black Americans participate in 401ks way less. By the way, if you have a business, one of the biggest tax write-offs you can get is having your own 401k plan. But that's a whole separate aside. All right. Now, here's the savings rate I was talking about. So Black Americans save roughly $291 a month in their 401k plan or the defined contribution plan. White Americans usually save, I'm sorry, I got that number reversed. White Americans usually save $291. They usually save $291 in their 401k plan. For Black Americans, they tend to save $231. So again, that's $60. That is that $60. That adds up. And yes, at the end of the year, that's $720. So at the end of 10 years, that's $7,200 that you had to leverage or had at your disposal to leverage and utilize for growth. I know it might not sound like a lot, but when we're talking about fighting our way from behind, one of the things we have to do is stop digging in the ditch. What do they say? If you want to fix the problem, what you got to do? How does that saying go? Stop digging the ditch, right? And start putting more dirt back in the ditch so you can get back to common ground. So once you're able to do that, once we're able to get back to common ground, as you save more, as you stop spending on nonsense, right, you're able to invest more. It's just basic arithmetic, y'all. 1 + 1 = 2. But in this scenario, 1 + 1 can equal 3, 4, 5, and 6 because of compound interest over time. So you gotta keep that in mind. Now, another interesting stat from the study was that Black Americans are 2 times as likely to borrow from their 401ks as white folks. We talked about that, kind of, right? We talked about the disparity in employment. We talked about how many of us help out our kinfolk, our family, our skinfolk, right? We talked about all that. So all of that as a play into why. Now, I also see a lot of us borrow money from our 401k plan for buying a home, sometimes for some business. And again, I'm not mad at any of it. But can you imagine if we had more money saved and we didn't have to take money out of the 401k plan to buy our home? Now it's a loan. You're taking a loan. So again, it's not bad. And you get to pay yourself back interest. But again, when we're looking at the 50,000-foot view of it, would it be much better? And a lot of us actually do have the earning potential, saving potential to put more money away. But we got to get more discipline. So with all that said, here are some of my thoughts, right, for getting us going. So number one, start small, right? But just get started. And when I say get started, just start investing. You can do it on your phone. I'm using my phone to broadcast right now, but you can do it on your phone. You can do it on your laptop. You can do it on the computer, but it doesn't take a lot. You only need $1 to start investing. The benefit of fractional investing is awesome. And again, you can start on platforms, and this isn't a commercial. Everything I talk about here is for education and entertainment purposes only. All right. Oops. But you can start, again, on places like a Cash App, a place like a Public. I'm moving all my stuff to Public. Robinhood. I know a lot of y'all are mad at Robinhood. I'm not mad at Robinhood, but I wanted to use the platform like Public because I think it's better for interaction. Because a lot of my investment that I'm sharing with you all publicly is all for educational purposes. So when you look at places like that, you can do some things. But again, it doesn't take a whole lot of money. Many people, the study talked about this, is that many of us feel that you need a whole lot of money to start investing. $10,000, $20,000, $30,000. You don't. You don't have to be rich to do it either. Again, like I said, it only takes $1. $1. And I know some of y'all are saying, because some of y'all said this to me before, but why invest $1? That makes no sense. Here's the thing. It's all about the habit. It's not about the money per se. Again, it's all about the habit. It's all about the habit of investing. So once you get going, right? So there's this adage, right? They said, if you want to start going to the gym more, just put your clothes out at night, go to the gym in the morning. That's the only thing you got to do. Once you do that one thing, right? That big thing, because that's the bigger thing, right? Just getting going, just getting started. Then you might start walking on a treadmill. Then you might lift a little weight. You might get on the elliptical machine or the row machine. I love the row machine, by the way. Right? You could start doing things. I don't get to the gym enough though. But don't shame me, y'all. Don't shame me. But again, just start. And again, it only takes $1. And then as you start to invest, I say start investing into things that you know, into things that you already use. And again, I say this a lot, but I don't think I can say it too much. Invest in what you know. Invest in what you buy. It's a start. It is not the end to investing. It's the start. It's like when you first start riding a bike, usually most of us didn't start riding with just two wheels. We had training wheels. So think of it as a beginner, as a primer of training wheels. All right. Just start. And so if you like Nike, right, you like what Nike's about because they sell to the NFL and they sell to the people that like Kaepernick, they about getting their money. That's cool. But if you like Nike, you wear Nikes, invest in Nike. If you drive a Ford, maybe look at investing in Ford. Again, these are not investment recommendations. I'm just talking about this for ideal purposes. And listen, if you can't figure out anything else to invest in, invest in an ETF. Invest in an ETF. Vanguard has great ETFs. BlackRock has great ETFs. All right. So you can look at some of the total world funds. I like the Vanguard Total World Fund. I think it's either VI or VTI. I always get it confused, but invest in the whole world. You don't need a whole lot of money for that, y'all. All right. So one, get going, right? Number two, invest in what you know. Number three, start looking at some of these tax advantage accounts because I believe we all pay too much in taxes. So if you are self-employed, in business for yourself, look at a 401k plan, look at a SEP plan, look at a simple plan, look at a Roth 401k plan, look at a Roth IRA. Again, that's for people that are self-employed and employed, right? But let's just start looking at these. If you work a regular 9-to-5 job, look at a Roth IRA, look at a traditional IRA, look at them all. Even for some of us who make good money, buying cash value life insurance makes sense sometimes, not all the time, but sometimes. Why? Because the money that's inside the cash value life insurance policy grows tax-free. You can pull it out tax-free. Now, many like the Roth over the cash value life insurance policy because it doesn't have as much fees, right? So anytime you look at insurance, you're going to have something called surrender fees, cost of insurance. But I like it because I don't feel that you could ever have too much insurance. Even though the survey said we are investing more into cash value or whole life insurance, I would still bet as a community, we don't have the same level of death benefit coverage as white America does. Life insurance is also a cheat code. It's not the only cheat code, but it's something you can use. All right. But so again, number three, look at tax advantaged accounts. Number four, can we please start talking about money, right? Not from a get rich quick standpoint, but from a long-term standpoint. So I would just say, talk about money. Talk about money. Not just the car you brought and the interest rate that you got on that car, on that loan. But what stock did you buy? Why are you buying it? Do you know why you brought it? Do you have a thesis? We talked about investment theses a couple weeks ago. Right? Understand that. All right, but let's start talking about this stuff more. Let's make it cool to have wealthy conversations. Y'all like that? Y'all like that? Pun intended. All right. Let's make it cool to have wealthy conversations. Because you can't really start to take action on anything until you actually had a conversation. Till there was some communication. Now, I ain't saying to waste your time and just talk. Right? But once you talk, once you figure it out, once you read some stuff, take action, implement. All right. Number five, do more research, please. More research. Everybody that buys a stock, I don't care if it's Nike, Microsoft, Apple, Tesla, whatever it is, please read their annual report. Make that a habit. Read their annual report. Listen to their earnings broadcasts or their earnings reports. They're open. There's a ton of jewels in them. Tons. All right. There's no reason not to get at this money, y'all. And again, I'm going to save that. All right. So do your research. Next one. Don't follow the crowd. Now, everybody calls me contrarian. I am a contrarian. I'm the finance rebel, right? But that viewpoint was built over years and years and years of study and research, because I noticed when everybody does the thing, people usually get trampled. If you ever look at the crowd, when somebody yells fire, people usually get trampled. Best thing you can do if that's a situation is just try to get to the side and let people run by you. Basically, stay out the way. Don't follow folks, because usually that leads in people getting hurt. Now, sometimes you might miss out. You might be one of the first ones to get out the door. But what if that position, I'm talking about running out of a theater, right? When somebody yells fire, you might be one of the first ones to get out the door. But what if you were sitting like halfway down the aisle and half of the theater is already running out the door? Sometimes you miss that window. It's best to just stay to the side, stay calm, and wait and watch for your opening, and then move. That's how you do it. But you got to stay calm. And part of the confidence of staying calm is experience and education. All right. So make sure y'all do that. Last one, y'all, and then I'm going to be out of here. Let's start thinking long term. Let's think long term. Let's not just worry about tomorrow's bread or today's daily bread. But what about the bread for next year? 10 years from now, 20 years from now? What about our next generations? What about them? It's not just about us. It's about our children's children as well. So again, everything shouldn't just start and begin with you. The more we move, the more we understand, the more we strategize, the more we execute, the better we'll be. And again, just looking at this whole study, this whole survey about Black participation in the stock market versus white participation in the stock market, this is a wealth conversation. And we're talking about how wealth moves in and out of different communities in this country, and how historically Black folks have been alienated and restricted from getting access to the stock market. But that day is gone. That day is gone. So I would advise you all to don't try to be fancy with it and do all the sexy stuff. But again, start slow, right? Start slow. Start with a little bit of money, but be consistent with it. Keep going. Keep going. Keep going. Leverage these tax advantage accounts as much as possible. Leverage them. Leverage that 401k because it's free money. Leverage it. All right? Start looking at what you can do for your children in terms of birthday gifts, in terms of holidays. Start giving them some stocks instead of giving them dumb toys that they're only going to use for maybe a week, maybe a month, that they're going to forget within the next year. If you give your child a piece of dividend stock, just pick one. Who pays the dividend? I'm thinking, who pays the dividend off the top of my head? Coca-Cola pays the dividend. Now, Coca-Cola doesn't have the best products, so you might not want to give Coca-Cola stock to your children because, the sugar and all that makes you fat. And we know folks in America are overweight. Listen, I'm the president of the Fat Boy Club, but I'm fighting my way to get out of it. But figure out, I'm blanking on a good investment, on a good dividend stock. Oh, Disney. I'm sure Disney has some issues, right? But Disney pays a dividend, right? What better way to talk to your child about that X-Men movie that came out, or the Disney Plus shows that you're watching? And you say, hey, we own a piece of that. We own a piece of that. So that could be something you can give instead of a toy. And again, you can buy fractional shares. You can buy gift certificates. All right. Look at the long range. Let's become more long range oriented. And one of the things I forgot to mention in my list is train your mindset, y'all. A lot of us are programmed to be negative. We can't elevate higher if we don't begin to vibrate higher. Y'all might not get that. And I'm not trying to be woo-woo, but you can't always stay in a depressed mental state and think you're going to be able to change some things. All right. So again, y'all, let's look at this. Let's not get caught in the fact that Black folks invest in the stock market less than white folks. When I do these, that's never my thing. I'll be honest. I really don't even. I care because it shows how Black folks have been mistreated and how we need to do that. But at the end of the day, the only change you can really be responsible for is a change that you make for yourself. And if you ain't about that change, if you're not about elevating and ascending higher, none of it matters. If all you want to do is complain about the white man, none of this matters. I guess I'm not the person for you to watch, right? None of it matters. Yes, we know there's issues, but any army fighting a battle with another army, what do they have to do in order to be successful? They got to make sure they got supply lines to bring the food and the water and the ammunition. That's an internal thing. That's not, they can't go to the battle and fight the enemy if they don't have their internal stuff together. When are we going to start getting our internal stuff together? Our internal monies together. Our internal mentals together. Can't go to battle if you're thinking, the white man's ice is colder. I'm not going to go too deep into that, y'all, but it all plays a part into mindset. We're God's children. So nobody is any better or any worse. We're all human beings. We're equal. So, all right, y'all, I'm not going to talk y'all head off. Y'all know I could talk about this all day long because it's one of my favorite subjects. Probably is my favorite subject. But listen, do me a favor, y'all. Go ahead and watch last week's episode with Raina. Go ahead and check that out on the podcast. Go on over to the Finance Rebel Show. All right. Oh, and another thing, just wanted to mention this. Shout out to Courtney Richardson. Y'all know that's my homegirl. That's my tax sister. That's my sister. We did a thing the other day, y'all. We did Unlocking the Tax Code. We did our first class in a master class series, and it was Understanding the Power of Business Structures. And it was successful. A lot of people got a lot of value out of it. I'm really, really proud of that. If y'all want to check that out, all you got to do is go on over to unlockingthetaxcode.com. Again, unlockingthetaxcode.com. So 2021 is a year of elevation and ascension for me, y'all. So I'm trying to help as many people as possible get to the bag. Now, I got a question before I run, and I meant to ask this question. I meant to ask this question at the top of the show. Put in the chat or in the comments how I can be more helpful. How can I be more helpful to you? What topics would you like me to cover? Is it something you'd like me to talk about or something you'd like me to do? Put in the chat, what can I do to be more helpful? I would appreciate that. That would definitely help me as I look to be better, do better, and ascend higher. Like I said, 2021 is a year of ascension for me. So I would love that feedback from y'all. I know many of y'all rock with me several times a week. And again, I appreciate that and I'm humbled by that. So again, what can I do to be more helpful to you all? So again, thank you all. Appreciate you. Everybody have a great day. It's the first day of spring. Y'all going out there and get some sunshine. We all need that vitamin D to fight off that Rona, right? To stay healthy, to keep our immune systems intact. And y'all be good and y'all be blessed. Have a great day, everybody. So long.